Bravo, Federal Program. Stand by for Mode 1, Charlie. And we are go for launch. Launch sequence engaged. We are go.
How are you doing tonight, Levi? I guess we should introduce ourselves.
Right.
I'm Casey with Keller Williams Realty, and this is Levi.
Levi Pollack with American Pacific Mortgage.
Yeah, and we just wanted to have a quick talk about mortgages tonight. So
Get some of those questions answered.
that's it. So Levi just had a kid, so how's that going?
Great. She's 2 months old today.
Oh,
And
wow.
Already almost 10 pounds. And I feel it's cliche saying, but they do grow up fast.
I bet. Well, cool. So how did you get into the mortgage business?
Well, it all started when I bought my first house. And I had a background in finance, so I feel like a lot was not explained to me. And we went through the process. I was definitely overpromised and underdelivered. But by the end of it, I had a house, came out of pocket a lot of money, and had no idea what happened. So to me, that was a poor experience, and I want to prevent that from happening to other people.
Oh, well, cool. And so how did you end up with American Pacific then?
Well, I got my start a while ago, because this is my 5th year now, and I started at a smaller place where I was able to learn the ropes, but didn't have necessarily the support that I needed, but have since, made a move that was definitely for the better to a company that has more programs, more support, more assistance, especially when it comes to, looking at what's going to be the most growth for my career and provides the most benefits to our clients.
Oh, cool. That's awesome. And so why should clients come to American Pacific Mortgage? What makes you stand out from the rest of them?
Well, aside from the way that I do business, which lines up with American Pacific's values, which is transparency, respect, and scrappy. And transparency, obviously, throughout the process, you want it to be smooth and clear without any room for doubt of what's going on.
So how do you guys accomplish the transparency?
Going over every single detail, making sure disclosures are well understood, as opposed to just sending them out and asking for a signature. I always arrange a phone call afterwards, once they're sent, to go over line by line each item so they understand where all their money's going. And before that, even explaining to them the process, how it works, different loan types. Once we build the loan, determining which one works best for them, but helping them understand this is the program we're using and this is why we're using it.
Well, that sounds awesome. So what is the other initials? You gave like T for something
And then respect, obviously, that goes a long ways both on the professional side for internally through the company, but every client that we service. And then scrappy, which I think is the most fun, but it kind of digs into the roots of what it takes to be a mortgage lender. Which scrappy, the way that they define it is doing everything possible to make a loan happen, and a lot of that is by having all the products necessary to originate the perfect mortgage for the right person, because not everybody fits into this perfect box. So there's out-of-the-box programs, there's of course your standard ones, there's down payment assistance for first-time home buyers, and then when issues arise, I would say we're glorified problem solvers. It's about not giving up, finding the solution.
So what's the advantage for a customer to go through like American Pacific versus going through their bank of Wells Fargo or who knows, some other bank, ABC Mortgage Bank or...
Right. Well, I mean, comparing a bank to like someone who specializes specifically in mortgages, when banks are very limited with what they offer. They may be very aggressive in some aspects, but you have to fit into their box, which is very narrow. There's no room for reason, there's no flexibility, and a lack of problem solving. You're also working with people that don't have to go through the individual licensing and testing and education to get a mortgage license, as you would with another mortgage company. So you're hiring an hourly person to do a skilled person's job.
Okay. Well, cool. And what products do you guys have for first-time home buyers?
Oh, I could bore you to death with that. Like, we could take hours, but I'd say the most common is Chaffa, which is a Colorado-specific product. We have nationwide products too, because we are licensed in 49 states. That's everywhere but New York. I specifically am licensed in 4 other states. But Chaffa is a very common one that's out here, and it helps with coming up with the down payment to cover your down payment and some of your closing costs as well. So that helps a lot of first-time home buyers.
And am I correct? I have a lot of buyers ask me about first-time home buyer programs, and I said, well, they really aren't there in the home buying, it's more on the lending side. Would you say that's correct?
Correct. And it can be misleading too, if you're not working with someone who's going to properly educate you. Because when you hear you're getting down payment assistance, that doesn't mean that's no money out of pocket to you. Now, on our end, when we're getting scrappy and creative to solving these different scenarios, we can minimize what their out-of-pocket is, and that's where working together with a strong realtor and lender, working as a team, you can save people money out of their own pocket, and even minimize what they have to bring to the table.
Well, cool. And so where are interest rates right now?
Well, on conventional loans, I would say we're in the low 7s. FHA is probably in the higher 6s, but government loans tend to have lower interest rates just because they are insured by the government.
All right. Was there any advantage to go? Can anybody get an FHA one at that lower interest rate, or are there specific requirements to get into that?
Yeah, anybody. Well, you've got to meet some of the minimum requirements, which can be at least a 580 or better credit score. It does allow for lower credit as well as higher debt to income ratios for qualifying. However, if you are below a 580, that is also acceptable. But then we have to talk about your minimum down payment's now 10%. So
if I put down 20%, is there any advantage going to FHA?
no, because you'll still have mortgage insurance, which any loan type except for a VA loan where you have to be a active or retired military service is going to have mortgage insurance whenever you have less than 20% down. Now what's surprising to most, when you're looking at your conventional scenario, when you do have mortgage insurance, sometimes you'll get a little bit better of an interest rate, because what that does is it reduces the risk to the investor that's servicing the loan in case you were to default and stop making your mortgage payment. Now that'll help you out a little bit. It's not going to be miles, but you're still going to have the mortgage insurance. So, putting 20% down obviously eliminates a lump sum out of your monthly payment.
Okay. And so if I'm a buyer, what do I need to know about the loan application process and things like that?
Well, the important thing is not to just start filling out an application. It's okay to ask questions and start somewhere, and that's where reaching out to a reliable lending source, myself, not to rule anybody else out, but I'll go through the process and explain to them how it works first before just sending them the link to the mortgage application. Now once we get the application, I like to go through it with them. Make sure we have a complete picture. It isn't a pass-fail, like I hope you filled this out correctly or we're just going to part ways. And I mean, I don't know how that works on the bank side. Maybe you're more of a number there versus a person, but I like to go through the app with them and then move forward together when it comes to pulling their credit. Now when we pull their credit, a lot of people can look at your credit score, your credit history and say, there's no way you're buying anything. But one of the great values that American Pacific brings to the table is we have a way to generate how to rescore. So as opposed to just telling someone you're declined and you can't buy a house, we can give them an action plan, exactly what they need to do in order to boost their credit so they can buy a house.
Oh, well, cool.
Yeah, and it doesn't take years to rebuild your credit. You can do it in a short period of time, and sure, there's some cases where it needs a lot more time.
What's the number one thing people can do to help their credit so that they can qualify? Let's say, I don't know what's going on, but what's the number one thing you recommend typically?
Not maxing out your credit cards. If you can keep those balances low. I know everyone says a good rule of thumb is like don't use more than 30%, but if you can keep it below that, even like at 10%, you're going to be in a much better position.
So if I have, let's say, a 500 credit score, what's the one thing typically I can do? Do I pay off, if I have a high credit card, do I just pay that off directly and that'll my credit score all of a sudden goes to 600, or how does that work?
It could help, but chances are with a 500 credit score, you might have more of a derogatory history than you realize. So that's where it's important to go through it with someone to understand what's on there. Maybe you have collections that need to be paid off, and they're from when you were a teenager, and they're $60 and $70, but without paying those off, every month they're going to ding you and make it so much harder to rebuild your credit. And as crazy as it sounds, this is one of those rare circumstances, if you can trust yourself, that I would actually recommend opening up additional credit cards, because the more on-time and full payments you have, the faster it'll make like that one late payment or a couple late payments you have look smaller and smaller, because it all comes down to building a track history.
So what does it take to build a good track history on credit? What do they look at, I guess, is my question.
The number of revolving accounts, as well as like how much credit is used, and then on-time payments are huge. But one of the things that weighs the biggest factor is how much of your credit you use. If you've got, which is why it's good to have a higher limit credit card, even though debt's scary and it's a lot easier to get into than out of. But if you can keep your budget minimal on it, it doesn't matter what you spend on it or what you pay off each month. You could spend $5 a month and pay that off every month. It's going to show an on-time and full payment. And that is going to help build a track record. If you have like 3 revolving accounts, whether it's a car loan and 2 credit cards or a couple credit cards, that's going to help build that history faster.
Okay, cool.